All right. Hello, everyone, and welcome back to the weekly rebalance, or should I say top of the morning to you for you St. Patrick's Day partiers out there. Hopefully you're enjoying your St. Patrick's Day, but not during company hours. You got to be providing that shareholder value. Ethan, how's your St. Patrick's Day been?
It's been pretty good so far. I like it, Nick. Happy
Yeah,
St. Patrick's Day to you too.
thank you. Thank you. Yeah,
It's after 4 now, so
it's after 4 now.
yep.
You can still trade fixed income, though, so you better not be partying.
Oh, sounds good.
Are you going to go out and get wild with the people in town for St.
I
Patrick's Day?
you know me. I do not think I'll be making it out, but we are going to do some corned beef and sandwiches and stuff like that this Friday at the office. So I'm going to be
Nice.
participating and making that. I could get the smoker out and make some corned beef.
Very nice. Very
You're
nice.
gonna you're gonna miss out being down in Virginia.
I know. I know. I'm gonna miss out. You're not even wearing any green. I don't see any green.
I'm not. No, I'm not. Do you have green on?
There's a little bit on my watch, so I count it.
Oh, nice.
I don't think I actually have anything that's green, like a polo or anything for work. I don't think I have anything that's green. So
I should have been wearing something green. I guess I got a green pen on my desk here, so.
there you go. There you go.
Oh,
Gotta get it somehow.
boy. Well, we're gonna cover some St. Patrick's Day themes today here, right? Gold.
Yeah. The weekly rebalance favorite. We're going back to gold.
Yeah. Back to gold for St. Patrick's Day.
Yep. Some exciting stuff to talk through.
Yeah. Before that, should we do a little bit of a market update and cover where we're at as of today?
Yeah, let's do it.
Sounds good.
Let's do it.
It's been volatile recently.
It really
Um,
has. Getting a little bit of a
continuing.
turnaround this week.
Yeah, continuing to be volatile, even though, yeah, a little positive yesterday and today, which is nice,
Yep. In the
but
spirit of
definitely
St.
volatile.
Patrick's Day, I see the
Yeah.
S&P is green, Dow Jones is green, NASDAQ's green.
Yeah. So where do we sit on the year-to-date basis now?
Yeah, year to date. Let's see. Up all my stuff here. Tell you what. This is all broken down by sector. I could tell you by sector. Let me pull up the S&P. We'll just start there.
We started the day, we were down about 190 basis points for the year. Mid cap, small cap were all positive, and or if I remember correctly, emerging and developed markets. Emerging markets was the big winner though. It was up 5.5% for the year, I think, before going into today. So could that trend of developed and emerging markets, basically international, outside everything outside the US outperforming, was intact last year and is still, even after the volatility this year, still intact.
Yes, yes, it certainly was here. Now I've got some numbers pulled up here. US stock down 1.75% year to date. Global stock ex US 2.7%, up 2.7%. So still seeing that play out here.
Yeah, absolutely. I think one of the most interesting things for me, which I did a little bit of a deeper dive on for one of our clients this morning in a kind of an investment committee conversation, was the defense stocks. And, in particular, we tend to see, and this does hold to be true, that defense stocks typically outperform the S&P when we're going into some major geopolitical event. I looked at since the 90s, the last 3 decades, that it looks like 77% of the time following major geopolitical events, defense stocks like Lockheed Martin, Raytheon, uh, global defense stocks like Rolls-Royce making engines and stuff like that. They tend to do quite well. And in most cases, again, 77% of the time following these geopolitical events, they're going to outperform the S&P 500. And in that year, since the 90s, they historically outperform by about 10% the first year following military conflicts. And then in the second year, the second calendar year after the conflict, they tend to fall, with returns averaging somewhere between 10 and 15% down after in the second year. But this conflict has been a little bit different. We saw the initial bump where Lockheed Martin, for example, was up 6.7%. Northrop Grumman was up 5.5% right after that Iran conflict, the weekend that started. Right after that, they opened up big time. But then they've since declined quite a bit and actually now are essentially flat month to date, which has been interesting to see.
It certainly has. It really has been interesting. I mean, just uh, you know, we've seen a lot of geopolitical tensions rising over the past couple of years. So potentially tying into what you were talking about earlier with your research, we've seen a lot of this build up. And again, this is adding fuel to the fire, but this is something that's been building up for quite some time. And those defense names have been rallying pretty heavily off of that news. So um, potentially following that trend you were noting earlier.
Yeah, well, it's been interesting. They were quite pricey going into this and then got even pricier right after that initial conflict. And then, the narrative has been, at least from the Trump administration, has been we're not going to have be in this conflict for long. We're going to de-escalate. We're going to be in and out pretty, within a matter of weeks. And I think that's weighed on things, the narrative around that. And then if that really is swift and we're pulling out, um, that's probably not a positive long term. But it's also called into question, I think, and created a little bit of conflict between the two sides of the coin here, which is calling into question what should be the long term uh, spend on the military, right? And when that gets called into question, as it has during times like this, the longer term trend there is probably the bigger thing that's going to drive valuations versus what's going to happen short term. Because, like you said, there's been a buildup for years here, ever since the conflict in Ukraine started, the war in Ukraine started. There's been a buildup, and those prices of those stocks like Lockheed Martin, Raytheon, et cetera, they've done very, very well as we've stocked up there. Now we've been going at it for 3 years, and if we really are going to de-escalate, and this war is not going to last very long, then that long-term spend on defense is kind of called into question. So we're seeing a little bit of a different performance here than normal. Again, normally the S&P 500 is going to underperform significantly the defense stocks, but defense stocks, again, surprisingly flat the last 2 or 3 weeks.
Yeah, yeah, been an interesting one to watch for sure.
Yeah. But do you think they're just too pricey to start, or what are your thoughts on that, Nick?
I haven't taken too deep of a dive on defense stocks in particular, aside from our discussion that we had earlier today. My initial impression, just watching them, you know, in the background over the past few years, is that they were getting kind of pricey. I mean, I'm taking a look right now at the Lockheed Martin price chart for the past few years. Um, potentially, especially earlier in this year, even just a lot of their growth came earlier in this year before we even got the announcement of Iran. So, yeah, potentially just a little bit expensive right now, even with the additional news that we're seeing coming out.
Yeah. Well, and that's this conflict has been interesting. We dove into this a little bit in some of the last conversations, but with our research for this week being on gold, gold has behaved a little bit differently, at least different than I would have expected with this conflict as well.
Yeah.
I would typically think of gold as a safe haven asset. Anytime there's volatility, concern, and risk, that gold you gets a bid. But gold has actually been a little bit more volatile than at least I would have expected. So I don't know. Should we dive into the research of the week on gold and get into some of the nuances of how it's been behaving the last couple of weeks?
Yeah, let's do it. And while we're on the topic, I actually had this prepared. This is Lockheed Martin versus gold over the past 5 years, and then down here I've got a correlation chart. And now,
Yeah.
obviously, it comes and goes over time. Especially since gold, you've kind of seen this more steady upward movement. Lockheed Martin tends to be a little bit more volatile. They have more pronounced sell-offs, at least over the past 5 years
Hmm.
that we're looking at here. But particularly when Lockheed Martin spikes, presumably because of heightened geopolitical tensions, increased chance of war, um, outbreaking, we see gold moving very similarly. Uh, and I think one of the interesting things, now this is like a very short time sample to make note of. So potentially we're just following a little bit of noise here. But we've seen, like you mentioned, Lockheed Martin spiked on the news of Iran and then kind of moderated a little bit and has pulled back. And we've really seen gold do just about the exact same thing and actually see the correlation continue to increase throughout the year so far, despite like a little bit of softness coming for both of the assets at the same time, which would, increase the correlation. So just found that interesting. I think it's a nice dovetail into what we were talking about earlier.
Yeah. So, I mean, that's interesting. So is that an 89.5% correlation right now?
Yep,
Wow.
0.895. Yep.
Wow.
And again, it
I,
comes and goes, going back further. We've seen these levels before, typically
mhm.
when we see Lockheed spike, presumably for uh, increased chance of war, but it's definitely an interesting thing to note.
Yeah, very interesting. It doesn't necessarily surprise me
Yeah.
that gold and Lockheed are fairly highly correlated. It just surprises me with this conflict the last 2 or 3 weeks that they've behaved as they have, because that's different than in past conflicts.
Yeah, certainly. I mean, I really found it interesting that they've behaved just so similarly since the
Yeah,
announcement of the
almost a
attack.
90% correlation.
Yeah. So finding both of those things interesting. Uh, there's definitely something going on here.
Yeah. Well, I think well, how would you explain the recent performance the of gold and Lockheed, defense stocks and gold, which are typically more defensive in nature? How would you explain some of that? Is it just prices? Lockheed was expensive, gold was expensive, and that's the reason why they, haven't just gone up into the right ever since. I know that happened the first couple of days, but then it really changed after that, at least for Lockheed. But what are your thoughts on that?
Yeah, I don't know. It's tough to say. I'd be interested to hear what you think on it. I mean, I think a lot of it is coming off of the price, just how expensive they are. It's not like we've seen either of the assets really sell off in a notable way. It's just we've seen them moderate. So we saw an initial spike, they softened a bit, pulled back, nothing too major in either of the assets. And then they've kind of held steady since then. So my guess is, they're basically saying, hey, all of this is priced in. We're not seeing anything else major developing here. And unless another shoe drops or something like that, this is kind of the range that we're in, and they're potentially a little bit pricey.
Yeah, that's my assessment of it as well. It's hard to think anything else because a lot of the investment thesis that would drive gold higher, focusing on gold specifically, is still there, right? The
Yeah.
geopolitical events, that risk, that is a bid for gold, in my opinion. Central bank buying, in particular, China's central bank has been a significant buyer of gold.
Yeah.
Um, the de-dollarizing of the world, right? Good for gold. Um, just a lot of debt out there. There's a really favorable macro backdrop for the price of gold continuing to expand up, even if it's pricey. But I think it's natural to get some of these periods where gold doesn't behave as you'd expect, just because as its price goes up, and like you had just had on the screen a moment ago, all the charts. It doesn't really matter what period you look at. If you look at any extended period of time over the last 2 years for gold, you see this massive price appreciation. And that can call into question, or at least create some additional volatility, just because become so pricey so quickly.
Certainly. Certainly. I would 100% agree with that. You mentioned the dollar a minute ago, and I found that interesting as well, just because we've seen the dollar kind of strengthen while we've seen these two other asset classes level out uh, for the most part. In the month of March alone, the U.S. dollar index, the DXY, is up 1.62%. So again, the dollar typically being a safe haven asset, or thought of as a safe haven asset, now that's come into a question a little bit more and more with this debasement trade, like you said, de-dollarization. But over the past month, we've seen the US dollar almost act more as a safe haven asset as opposed to gold or
Yeah.
something like that. So another interesting thing that we're seeing here.
Yeah, very interesting. The last 3 weeks have been interesting, and at least from my perspective, would not have been exactly what I predicted going into a market like this. The first couple days, at least with like defense stocks and whatnot, look normal, but gold in particular didn't quite look like what I'd expect. But like we said, I think it's just so pricey so quickly that there's a little any type of rebalancing there, any type of risk off environment, because it's pricey, it can get sold off a bit. But in general, like we said, there's still a big demand for gold, and that investment demand is a core mechanism for driving gold prices. And gold more than silver, especially, is more of an investment, central banks buying and et cetera. Silver is more an industrial metal. I don't know if I could call it an industrial metal. I don't know if that I would go as far as saying that, but it's more used in the industrial process than gold
Yep.
for sure. So gold tends to be, that's still in place, central bank buying still in place, and they're not making any more of it. So
Nope, that's for sure.
it's not very quickly. The Earth isn't making much more gold. So
Until we can mine asteroids.
yeah, exactly. There's only so much of it, which is why we see that debasement trade, the D-dollar, that the debt that's being created and spent by governments across the world is a strong case for why gold continues to be a big positive, have a positive price momentum, because there's a limited supply of gold.
Yeah.
So I don't know, but I am still fairly bullish on gold. I know when we first started talking about this sometime well, we've only been doing the podcast for so long. We've been talking about
Yeah.
gold for a while, but when
Yeah.
we were recording, middle of last year, whatever, we were very bullish.
Mhm.
Gold has gone up significantly since then, and I can't find a reason not to be bullish on it other than just, how quickly it's gone up. All the dynamics are still there.
Yeah, I mean, it's certainly gotten pricey, but like you said, the story really hasn't changed. Uh, Now, when we were talking about it earlier in the year, we were really bullish on gold, not necessarily bearish on silver, just a little bit more reluctant there because it had risen so rapidly. And we saw that continue. And silver outperformed gold, at least through the end of the year last year. I was taking a look at it today, at least as of today, year to date, gold has outpaced silver again. And silver has had a much more volatile year. Silver really took off at the beginning of the year, looked like it was going to continue on its run, and then sold off a bit. And now they're a little bit more neck and neck. So, again, just another interesting data point to have. Like you said, silver being more of an industrial input, it does tend to have, they're both very volatile assets. But I would say that silver potentially has a higher potential to be more volatile, again, just because it's not a form of reserve that a central bank can hold. And a lot of the story with gold is with central banks and inflation, and silver being a precious metal is an inflation hedge to a certain degree, but it does tend to be very correlated with the business cycle since it is
Yeah.
an industrial input. So I still like the gold outlook.
Yeah. I could see the correlation between gold and silver, which has been fairly high recently. I could see that break a little bit, especially. So let me lay out a scenario for you and see what you think of this. But let's say oil stays high, the price of oil stays above $100 a barrel. That hits inflation, it slows growth,
Yep.
squeezes margins, squeezes the economy, and economic output drops. Does
Yes.
silver does silver, the price of silver, because it's more tied to economic growth and economic output used more in the industrial process, could you see silver actually sell off while gold goes up, and that correlation that's been positive recently actually become either less correlated or negative?
Yeah, I think it's definitely possible. And one of the things, one of the other pieces I brought in here, just because your note on oil, I found that interesting. And again, one of the things that's kind of looming out there that people are potentially becoming more and more concerned with is just stagflation. Um, we've seen the job market start to show signs of weakness, uh, increased pressure on oil prices, oil continuing to increase, uh, likely to increase inflation or have at least some sort of impact on inflation. Uh, Kind of a reasonable setup for concerns about stagflation. So my mind goes to the 70s, the oil tie-in, stagflation in particular. And
Mhm.
I wanted to look at, let me see, I have a bunch of charts here. Where's my, hold on one second. Let me find my chart here. I
Yeah.
had one from, I looked at the 70s, and the S&P 500
Yeah.
versus gold over that time period. Might have to make that one really quick.
Yeah, go for it. Well, that I think it'll be interesting to follow that gold silver relationship if we get
Yes.
into a period of, I hope this doesn't happen, but if we get into a stagflationary environment or something like that, where inflation is higher, growth is slowing, I do think that silver and gold will behave differently. And I think that that's a bid for gold and not a bid for silver, a sell of silver. I don't know if the correlations would ever become negative. That seems like a stretch, but I think it would certainly be less highly correlated, and I would expect gold to outperform significantly. I would expect gold to outperform the S&P during that period as well, but I guess you're going to pull that up here, and we're going to look at that. But
Yeah, yeah.
my guess would be gold would outperform stocks during a period like that as well.
Don't know why my chart disappeared, but hold on here. We're getting it back. We'll end it in
Okay,
1982. I
sounds good.
think most of the stuff was up at that point. Put these together. Single panel.
Think the other key with a lot of this is we're not in a situation where we know the future, right? And I think to take this to clients, this was I've had a number of these conversations recently because what I see happening a lot is there's a bid for something that's already gotten really pricey, right? Now, defense stocks, for example, or energy stocks in a case like this. Gold can be a case. You can be a case. You can make the case that gold can be this after it's gotten pricey. Everybody's interested in gold after it hits the news cycle and it's already pricey. And I think, as we talk through these things, it's really important to parse through what's just the news topic of the day that's gotten interesting because it's done really well recently. It's garnering some attention in the news media. What's that versus are there still fundamental characteristics that are solidly supporting whatever investment you're going to make? In my opinion, defense stocks are more in question right now. Hard to know because the long-term trend on government spending, the geopolitical tensions, unknown. I think those are hard to trade. Gold in particular is one that the fundamentals for why gold is still pricey is still there from my perspective. So, but it's important to, as an investor, to parse through that and make sure you know when you're making an investment, especially in a topic that is getting a lot of attention recently. Are you investing because it's coming to your mind and it's being covered a lot? And getting a lot of attention in the news media, or are there really fundamental cases in which support the investment still? And again, I think gold is one of those that still has a fundamental support for its continued rise in price throughout this year, but it's easy to lose track of that when you're making investment decisions, especially for retail investors, and something to guard against.
Yeah, definitely a big thing keep an eye on. Like you mentioned, with the defense stocks being a little less certain on those ones, I think the reaction in terms of gold leveling out a little bit more after that news, not necessarily behaving as we might have expected as a safe haven more directly. I feel like the defense stock one is a little bit more. It was something we anticipated a little bit more because it's very common for news to break over the weekend, come in on Monday, and everyone's asking you to buy defense stocks after they're already up 10%. How much more room is there? At least in the short term, unless something else happens, that
Yeah.
sort of thing. So it was a big.
But that's a good example. You come in, and if you get really excited over the weekend over the weekend that the attacks in Iran happened, and you try to get into Lockheed Martin,
Yeah.
it's already priced in. That's already priced in very quickly. So if there's a fundamental case where Lockheed Martin is going to be going up in price and their multiple is going to expand from, I think it's almost 40 right now, from 40 to 45 or something like that, great. That's a great reason to invest. But if it's, I saw over the weekend a war is starting, let me on Monday go buy Lockheed. Most investors are going to be late to that. And in a case like this, is a perfect example. If you would have done that, you would have bought into Lockheed Martin after it's up 7% and then had it fall back to
Yep.
where it was before, and you would have lost money on the investment. Again, it's an emotional reaction to something versus I had a fundamental reason why I was picking this investment.
Yeah. Definitely. And staying the course too. Having that sound rationale helps you stay the course, even if you
Yeah,
see some volatility, which is expected to happen, especially for a long-term position.
yeah,
Here's
absolutely.
that chart that I wanted.
Yeah, so what are we looking at here?
Yeah, so we're looking at the price of gold and the change in the price of gold from 1970 to 1982 through the end of 1982 versus the change in the S&P. So the S&P is in purple, change in the price of gold is in this gold color, conveniently. So you can see big difference in returns over that time period. Stagflation, in my mind, is that's the time when you want to own gold. Growth is basically zero, so
Right.
stocks aren't offsetting inflation, and inflation is increasing the value of gold. So a recipe for gold to return well. So this is what we saw last time. Now, this was an extreme example. U.S. broke from Bretton Woods, like right at the beginning of this as well, which is also certainly contributing to this. But just a great example of a stagflationary environment and the returns that we saw in equities and the returns that we saw in gold.
Yeah. So that's 51% in equities over basically a 12-year period and 1,170%. Is
Yep.
that right for gold
Yep.
over
In
the same
gold.
12-year period?
Yep.
Yeah.
Now that S&P figure that does not include dividends. For
Okay.
whatever reason, that time series doesn't work that far back. But just the change in price versus the change in price.
Okay. So it would be obviously higher with dividends, but it's not going to make up 1,000+% over that 12 period. That
No,
just from dividends.
nope, don't think so.
Very interesting. Well, unknown if I'm not saying we're going into a period like that, but
Yeah,
definitely something to be on the lookout for and be aware of.
no, definitely, definitely. I would agree that it's not going to be the same. But if you're gonna, point to a historical period that has similar characteristics or stagflationary environment, that is the textbook example.
Yeah, sounds good. All right. Well, thanks, Nick. Should we move on and wrap up with some trivia for the day?
Let's do it.
Sounds good. I've got one good question for you.
Okay.
I'll start off
All
with
right.
this is a gold related trivia question.
Oh
So
boy.
which central bank has been buying gold for 16 consecutive months as of February in 2026? And how much did they add to the reserves in February alone? So two-part question.
Okay. Let's see. I mean, I know China's been buying a lot. I think you mentioned that earlier in the podcast, so I'm going to say China.
That is correct.
Okay.
China.
And
China
how
has
much did
been
they
16
buy last
months.
month?
Yeah, how much? You a guess in troy ounces if you want to take a guess.
Troy ounces? I don't even know. I don't even know. Mm,
I'll give you a hint. They have 74, just over 74 million troy ounces of gold right now.
currently, okay, that's helpful. Um, I'll say a million.
Million. That was a little high. I think they've slowed their pace of buying a little bit recently, but they bought in February 30,000 troy ounces.
Okay, wow, yeah, 30,000, million's high, but wow,
Yeah.
30,000
Lot,
Troy ounces. That's a
lots
lot of
of
gold.
lots of buying there. Yep.
That is a lot of gold. All right. Well, that's a good one. That's some good facts to have. I've got two fun ones, which are St. Patrick's Day related, because we're gonna be festive here.
I like it. So that sounds good to me.
I think you'll get the first one.
All right, let's see.
You'll probably get this. I don't know. Let's see. What profession are leprechauns known for in traditional folklore?
Questioner. Well, I was going to say gold mining.
Oh my. I mean, they got a lot of gold.
Shoemaking.
Yes,
Shoemaking.
shoemaking. Yes,
That makes sense. Okay. Got it.
making shoes for gold.
Making shoes.
Yes. All right, that was a good one. Here's my second one. Saint Patrick is famously said to have driven this animal out of Ireland.
Famously said this animal out of Ireland?
Yes,
The lion.
the lion. I like it. I like it. I'm just curious. I'm curious where the lion.
I don't know. I have no. I
Yeah.
was trying to think of an animal that's probably not natively in Ireland anymore. So
Okay. Yeah, that's fair. Snakes. I mean, that was a good route to go. Snakes.
snakes. See, I think that they see that doesn't make sense because there's definitely snakes in Ireland still.
Apparently not. No,
Really?
no snakes in Ireland
What
since the
snakes in
ice.
Ireland?
Yeah, they say it's more of like a myth because they say that there haven't been snakes in Ireland since the Ice Age, but um, nonetheless, it was attributed to him, and they say it's more
Interesting.
likely tied to paganism as opposed to the actual driving out of snakes. But that is what they say.
Interesting. I would not have guessed that.
I
I was
like
just
the
trying to
lion.
come up.
I
I,
like the lion guess. Honestly, that one's fun.
yeah. I was just trying to think of something that's definitely not native to Ireland. So I was gonna guess a lion or tiger.
That's a good. That was a good route to go. I would have guessed that Ireland had snakes as well, but apparently they don't have snakes.
I would have never even thought that there's any country on Earth other than Antarctica. Not that they're a country, but I would have guessed that every country has snakes and every continent has snakes except Antarctica.
Yeah, yeah, I would agree, especially Ireland. I mean, I've never been there. It just like seems like a place where snakes would like it. I mean, I
Yeah.
guess it might be a little bit cold, but it's they got the rocks,
Yeah, I would have guessed that they would have been there.
lots
Interesting.
of rocks. It's an
Well, you
island.
learned something new in the trivia section.
There you go. Not finance related, St. Patrick's Day related.
Yeah, I like it. Well, happy St. Patrick's Day.
That's all right.
I don't have anything else for today.
Yeah, I think that wraps it up.
Sounds good. Well, happy St. Patrick's Day, Nick. Happy St. Patrick's Day, everybody. Thanks, Nick.
Hi, everyone.